Monday, October 30th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning, I'm going to talk about how the government manipulates the data and is a great example of it last Friday with the GDP numbers for the US, the preliminary number for the third quarter, and I'll talk about that in a minute. I also want to talk about an exciting cryptocurrency tool I think is going to do really well, and it's already working. It's called multi-token, and I'll talk about that later as well. Before that, of course, I'm going to look at the markets, see what they're doing this morning. The clocks in Europe have gone back an hour. I know the clocks in the US go back an hour this coming Sunday. So right now it's 10 to 8 a.m. London, but it's actually 10 to 4 a.m. Eastern Daylight Time. We're only 4 hours ahead for this week, 4 hours ahead of the East Coast in the US. So let's have a look at what the markets are doing this morning. Yesterday, as the markets opened earlier for us for this week, the futures opened around 10 o'clock p.m. London. And I was doing a live stream yesterday, and while I was doing the live stream, the market was open, and the Dow was up almost 200 points. So where are we this morning? The gold price, spot gold, is $12.31.11. It's down about $2. So the gold price right now technically doesn't look very good short term. I guess the move on Friday was didn't help. We broke out of a key technical level and failed. So right now it's kind of stuck here below 1236, which is, I think, a key resistance. Longer term, I'm still quite positive about gold. Of course, it's the only way to protect yourself against fiat money, the fiat money scam, gold and silver, in my opinion, in the long term. That's why I also encourage people, when they ask me, if they're interested in buying gold, you can go to my promo code Monaco64 at goldinvestments.co.uk. You get 0.5% off if you buy bullion. One of arguably the oldest bullion dealer in the city of London. So overnight, the low's been 1230 in gold and the high 1236.50. So these are the parameters at the moment. Silver is down 5 cents at 1463. The high's been 1477 and the low 1462. So we're right near the lows in silver. The Dow actually has come back off from triple digit gains. We're up 80 right now, 24,761. We have been down on overnight actually, because the low has been 24,655. So the stock market has been very volatile, and I said that yesterday in my live stream. We're going to get a lot of volatility right now. The technical picture still looks very bad for the Dow. I think we're going to see a lot worse to come. That's my opinion, for the next week or two, or going into November. The S&P is up 1/3% as well, 9 points, 2666. Nasdaq 100 futures up 48 or 0.7% at 68.96. The currencies are very quiet this morning. Sterling or cable is unchanged, 128.29. Euro virtually unchanged as well, 114.07, and the dollar yen is unchanged as well. So very interesting that the fiat currencies, the foreign exchange market is very quiet. 111.92 the dollar yen. The Chinese currency, Chinese yuan, is at 695.90. I saw a story as well that the Chinese are saying they're gonna defend that 7 level. They're not going to let the yuan drop further. Of course, going to 7 means the dollar is going up, and that's what they're talking about. Crude oil is down about 0.5%. Both WTI and Brent. WTI is 67.28, Brent 77.15. Bond markets The 10-year yield right now is, I think, yeah, it's unchanged from last Friday, 307. And the Italian 10-year yield, yeah, has dropped over this morning to 335. Still fairly elevated and still can move very quickly. So if you think the Monaco 64 channel adds value to you and you'd like to contribute or help the channel, check the links below in the description. Let's look at the GDP deflator. Well, let's look at GDP. The GDP deflator is something I'm going to talk to you about. So on Friday, we had the preliminary, excuse me, GDP data for the third quarter in the U.S. So there are three releases for GDP in the U.S. There's the preliminary, the advanced number, and the final number. There's three numbers. This is the preliminary. It was expected to come out at 3.3% year on year for the third quarter. Yeah, these numbers are not quarter on quarter. They're annualized numbers for the third quarter. So the economists were expecting a 3.3% increase. They were expecting also a GDP price index of 2.1%. The GDP price index is basically the measure of inflation that they take away from nominal GDP to get the real GDP number. It's the number, the inflation number they calculate for year on year for the third quarter as it relates to GDP. So where did the numbers come out? Well, the GDP number came out at 3.5. Whoopee, better than expected. It was expected 3.3%. But you need to really comb through these numbers and look under the surface, because GDP price index, it was expected 2.1 and it came out at 1.4. How come the sudden drop in inflation through the GDP numbers, even when the Fed is worried about inflation, is raising interest rates, worried about the heating economy, and we get a GDP price index number of 1.4%, and the previous number for the second quarter was 3.3%. Are you really telling me that inflation, the rise in prices, halved in the third quarter? I mean, in the real world, we know the cost of living is going up a lot more than 1.4%. So are you really telling me that inflation is only growing at 1.4% in the US? I mean, you be the judge. So what am I trying to say here? Where should have GDP have been? Well, if you take the forecast of 2.1, let's say it was maybe a little higher than expected, just like GDP was higher than expected. Let's say it was 2.3%. So that would have been almost a 1% less for the real GDP. It would have been, we would have seen real GDP at 2.6%. That would have been a lot worse than the expectation of 3.3%. Don't forget, the lower that GDP price index, the higher that GDP number is. So if we had just come in line at 2.1, GDP would have missed completely. So you can see how they fiddle around with the numbers to make it look good. So don't buy into it. The US economy is not doing well. GDP data, again, manipulated. Multi-token. Before I go forward and talk about multi-token, I'd like to say that I'm an advisor for the company. I was approached by Multi-Token a couple of months ago. I'm an advisor to the project, so I do have an interest in it. But they've come out with their alpha version of Multi-Token, and I've used it and it works really well. Are they doing an ICO? No, they don't plan an ICO. They're doing a securities token offering. So they're going through a harder regulatory, path. So what is multi-token? Well, I'll go over it here for you. It says decentralized solutions for crypto investments. Create your own fund with zero service fee. So that's what they're doing. Multi-token, a protocol for decentralized funds. Create an ETF, index, hedge fund, or investment fund. Zero service fee. Anyone can create a fund and monetize their investment strategies. Alternatively, users can buy and hold top performing multi-tokens created by professionals. Funds are securely stored on transparent smart contracts so that there is no custody required. No custody, no intermediaries. They're even going to have a multi-token bridge. You'll be able to, because they are on the Ethereum blockchain, but multi-token bridge delivers true cross-chain compatibility by connecting any blockchain to Ethereum. With multi-token bridge, any asset, regardless of blockchain, can be added to your multi-token basket. That's not up and running yet, but they've got the Ethereum blockchain version, and I tried it out. I didn't put much into it, and it's very easy. You go into their alpha version. You have to be linked in. You have to be logged into MetaMask or whatever you use. I've got MetaMask. I put a little bit of Ethereum in there, not much, just to try it out, and I put some Ethereum into the top traded Kyber index. So it took a couple of minutes or so for the, the operation to go through. It was very easy. There are other indices or indexes that you can do right now, as you can see here. And I think it's an interesting concept. It makes it really easy for people to build their own fund or index. You don't have to, and you can copy the big fund managers. So I think this is quite interesting. Multi-token, their website is multitoken.org or multitoken.com, whatever one you use, and have a look. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.